get your global perspective on the investment environment at this point in time. William Ford, CEO of General Atlantic, and Sandeep Naik, MD General Atlantic India, join us on the show right now. William, good to have you on the show. Let me begin by asking you about the world as you see it. Globally, the emerging world seems to be entering into a slowdown. And on the other hand, the U.S. seems to be giving better economic data and hitting out with new highs on the markets. Are we likely to see a strong diversion of flows from India and other EMs back to the U.S.?
Yeah, we don't think so. We continue to believe that the economic growth prospects of most of the emerging market countries where we're active, India, China, Southeast Asia, and Latin America, are extremely attractive. And these economies are likely to grow at 5% or greater, on average over the next 5 to 10 years. And we think that sets up a very attractive environment for capital investment.
Which asset class do you see money flowing into now, given that equities are facing issues and commodities have fallen significantly?
Well, I think money has flowed back into the developed markets, particularly in the U.S., as the U.S. economy has begun to improve with an improvement in the housing market. But I think long-term, to really secure strong returns, money will have to remain in equities, and I think will remain in emerging markets equities.
What's GA's overall fund size and how much of the allocation is for India?
Well, today we manage a capital base of $18 billion, and that includes 50 portfolio companies as well as a dry powder of $7 billion. And today our portfolio is about half U.S. and half non-U.S. And over a third of our portfolio is emerging markets, with a significant allocation to India, China, and Latin America. I think in the years ahead, over the next 5 years, we'll be investing about 60% of our capital outside the United States, again with an increasing allocation to emerging markets.
William, what's the overall plan for investing in India?
Well, we've been active in India since 2002, and we've been, as you pointed out, we've invested over $1 billion of capital here. We've also returned $1.4 billion of capital to our investors, so we've had a lot of success with investments like Genpact, Plotney, Dosh, and several others. So this has been a very attractive market for us. We've got a great leadership team here in India. Sandeep Naik runs our office, and we expect we'll be investing $400 to $500 million over the next 2 to 3 years. So India will remain a very important part of our global strategy.
Right. Sandeep, come to you then. Which are the sectors that you're finding attractive in India at this point?
We've always maintained that India is a local consumption economy, and hence any sector that's touching the consumer directly is a sector that we are interested in. And so by that I mean healthcare, and by healthcare I mean healthcare services. Anything that the consumer is directly benefiting from or the consumer is directly consuming. We're talking about consumer and retail sectors, be it consumer goods, consumer durables. In retail we are looking at fashion, we are looking at apparel as sectors. In financial services, we are looking at lending as a sector, we are looking at banking. Anything that directly touches the consumer, which the consumer is actually benefiting from, are sectors that we as General Atlantic are very bullish on, and are sectors that we'll continue to evaluate and deploy capital in.
Sandeep, you're mostly invested in IT here. Given that there is a slowdown in IT spends and also that NC disappointed massively with their earnings, how do you see the space performing going forward?
You need to look at sectors depending on the cycle. And General Atlantic as a firm, we went into IT services at a point when that sector was really growing at a pretty fast clip. So we went in, we took a big exposure to that sector, and we made a lot of returns for the firm and the shareholders of those particular companies. Today that sector is facing some headwinds. We believe good companies within those sectors will continue to perform, but we as a firm have then tried to identify other niche segments within the services sectors in technology. For instance, we have invested in a company like New Sigma, which is in the data analytics space, an exceptionally hotspot, fast-growing company, which has done phenomenally well and exceeded our returns expectations. So as a firm, we are trying to find other niche services within the technology space that we would like to go and back as investors and scale those companies to billion-dollar companies.
You also like pharma as a space. What looks attractive here?
I think healthcare services in general is a great time to invest in. When I look at the pharma space, India has about 18,000 pharmaceutical companies. you clearly don't need so many companies. So there will be some consolidation in the space. You've seen a few big pharma transactions happen. We continue to evaluate the space. Generic pharmaceuticals is going to continue to drive the growth in the Indian economy. And so we're looking at some of those spaces, but again, looking at very niche companies catering to certain disease indications that have a good share of the market that will continue to grow. So we continue to be bullish. We're also bullish on the hospital space. We're looking at a lot of the other healthcare services companies like clinical lab deals, diagnostic chains, eye care chains, anything that's directly, again, benefiting the consumer and touching the customers.
Okay, and finally, Sandeep, you spoke about being bullish in financials. Any preference between PSU banks or private banks there?
If you look at India and where India is in its economic life cycle, financial sector is a sector you have to play because you will benefit from playing out that sector, and that sector still has about a couple decades to evolve. So within financial services, the sectors we like the non-banking financial services. A lot of people get bearish on that particular sector, but we believe the customer segment to which that particular sector can lend to, the kind of products that they can take to, I think there's still a lot of depth left in the market. NPAs are rising, that's true. Credit quality might be deteriorating. Books might be getting stressed. But if you can back good companies with good governance that can actually underwrite that particular customer segment, there's a long growth left. The reason why we as a platform are best suited to back these companies is because we have permanent capital. We don't have to go out and fundraise every 3 to 5 years. Hence, our holding period in a company is 5 to 7 years. India fundamentally is a long-term market. You cannot expect to go in and exit a company in 3 to 5 years in a typical fund structure model. Hence, I think given we can be patient capital and we can go through some of the humps that you will see that any particular sector will face over the next 5 to 7 years, we believe we can ride through those difficulties, back the entrepreneurs and the management, and come out on the side where it's a win-win both for the shareholders as well as for the investors.
Fair enough. On that optimistic note, we let you go. Thanks very much, Sandeep and William, for joining us and giving us your view on the Indian market and the potential of investment out there.